Welcome to the fifth episode of STOKR Insights. Today is 4th of May and you are with Arnab and Tobias. Hey Tobias, how are you doing?
Hey Arnab, how are you doing? Are you in Berlin again, right? I see it from your background.
I'm in Berlin, yes, and sun is shining, so the weather is getting better, I would say, the northern part. And how's it in Luxembourg?
Yeah, you can see behind it's a little bit blue and a little bit sun. Yeah, the summer is coming finally, so I'm very happy about that.
That's great, that's great. So on the fifth episode, as for the audience, as you know, that we divide these episodes usually into two parts, the part A and part B. Part A, we talk about what is happening in the current market, in the financial markets or in the crypto market in specific. And the financial markets, there are a lot of stuffs happening. So we will focus on that. And the part B, we talk about asset tokenization primarily. And in the last few conversations, we were discussing about securitization vehicle as a issuance vehicle for tokenized assets. And this conversation will continue also today in the part B. So Tobias, I think the last week we had some interesting moment. We were discussing about the First Republic and the share was going down, and some crazy stuffs happened over the last few days. Just from the time we recorded the last episode and today, and which is I think around 6-7 days. So can you give some more insights about what really happened and what is the impact on that in the market?
Yeah, so what happened since the share price crashed is that finally, due to the outflow of deposits, FDIC on 1st May, they took the First Republic Bank into receivership. And on the same day, they also announced that JP Morgan is taking over the deposits and assets of the bank. And I think all financed by a 50 billion loan of the FDIC. So the FDIC is actually the sort of a mix between a regulator and a depository, but the prime focus is of the FDIC to save the banks, and they use like a fund which is made out of fees to give this loan actually to JP Morgan to take it over. One interesting fact, Arnab, I don't know whether you heard about this, is that this loan is a fixed rate interest loan over 5 years. And there were a lot of journalists in the last days, they were asking what is actually the interest rate. And neither the FDIC nor JP Morgan said actually what is the interest rate of this 50 billion loan where they took over the deposits and assets of this bank.
So it's a best friend interest rate kind of thing.
We can only assume. We can make assumptions, but probably it's not a very high interest rate, right? Because otherwise, maybe they would have disclosed it. Huh?
I have actually one question because I know you were researching on this topic for quite some weeks, I would say. And I think it's very, very simple, or maybe you can call it as a very stupid question on this point, is how much FDIC technically has. So how many this kind of bank falls FDIC can manage? And connected to that point, I will ask maybe one more thing is how big are these bank failures? Because we heard First Republic, but that's not the only one. We had the Silicon Valley Bank, we had the Signature, and all these things that's happening, and there may be new coming in. So where we are standing at the moment?
Yeah, and there I think Arnav, I showed you before that we found like a super interesting graph. Can you see my screen?
Yeah, I can. Yeah.
Yeah. Okay, that's perfect. So this is like there you can estimate a little bit what actually happened in the last a few months, right? Because people maybe sometimes think, okay, there are some regional banks in US, and this is not a very big issue what is happening in US right now, and this is also like the main narrative of the government. And here we see a lot of bubbles, obviously, in the financial crisis, but where a lot of banks were falling. So each of these bubbles is a bank failure, and the size of the bubbles is signifying the assets of these banks. So the biggest bank fall in around 2008 was Washington Mutual Bank. And now when we go into the timeline, we see going like to the right side to 2000 after 2022. So it's this year and 2023, we see 3 big bubbles, and there you can see really very interesting that these are not minor failures. So out of the 4 biggest bank failures in US, 3 just happened over the last 2 months.
And now we are also listening about the PacWest, right? That's another bank that is that lost 50% of the share value, right? In the last, I think from yesterday, right, Tobias?
Yeah, this is also like one of the banks, and they are currently under discussion whether they will survive, because they have also like big deposits outflows, right? And at the same time, as you rightly mentioned, the share prices obviously are going down. So this is like a give and take game, in my opinion. So when the share prices are falling, people get also the impression that this bank might be not stable, right? And then they take also the money out. I think this is very interesting. But behind this, it's very interesting because behind all these falling share prices, there are also like a lot of short sellers now in the market, which doubt about actually this main narrative that there is another problem lying behind the whole banking system actually in the US. And I think it's a very interesting development here.
I think it's a market of 22 trillion, right? The US banking industry. And what you just mentioned, and I was also checking some statistics, it's kind of around 200 billion. They were having like 124 billion, I think FDIC has in their own balance sheet, and they have some another 100 billion. They have a line of credit from Treasury. So it's kind of in a certain way a taxpayers' money, you can say that. And that means it's around 1%. It's kind of around 1% only the FDIC is insuring. So the situation is quite grave, I would say, also as you highlighted, because what I can see from the number itself to be is if Silicon Valley would have been absorbed by FDIC is wiped out, right? So, so how many
It's
times you
a
have to invite?
very that's a very strong statement. But obviously like this, because like they have only like this kind of fund what you have mentioned, where they can rescue like the depositors of the bank. And obviously this this pocket is not big enough to rescue like the whole banking system in the US. And I think and I think we mentioned this also in the last episodes, like on the sites. In the end, it will be obviously the taxpayer who is taking the burden, right? And the main narrative now is that the taxpayers are completely untouched because this is like a fund. But who is the owner of the fund is actually the Treasury, and the Treasury is managing the taxpayers' money. So it's a very short sighted narrative, I think, which is easy to look through.
Yeah, I think printing happens at the cost of taxpayers or the cost of citizens, right? And here, as US being global currency till date, I would say still today is relevant. So everybody takes the risk of inflation. It's not only the US, right? Anybody sitting anywhere in any part of the world at this stage. So
Yeah, but I think one important point here, Arnab, I think, because like what we see is right now is not printing money, right? But the Treasury cannot print money. They have like the taxpayers' money. What has happened not so far, and I think this is why, because you mentioned it, because of the inflation, the Fed cannot step in and print additional money to save all these banks, because then the whole idea of rising interest rates would totally go away, right?
yeah.
So they are like really they have really a problem. And when you see also like the discussion now with the debt ceiling, I think it's one thing also like in this context, it's very important. Um, they have currently already like problem to manage like the huge spendings. And when now these bank failures come, maybe you're right. At one point of time, the Fed would need to launch like the printing press again. Right? Yeah, so as we can see.
Are you hearing anything? Because I think Europe is not that far from US in that certain ways, and a lot of the banking relationships are very closer. I would say the economies are quite closer, also in a lot of different ways. Do you see immediately at the moment any news apart from the what happened in Switzerland a few weeks back? Other than that, are you seeing any distress in the European banking segment at the moment?
I think we can only speculate. I have not seen specific numbers. I don't know whether you have seen. There's just like a fear, right? That the rising interest rates in Europe will have a similar effect as they have in the US, which would not be very unlikely, right? Because the banking system is set up similar. I think the biggest risk in Europe is probably of the property debts the banks have. So they have definitely deposits, but they gave out a lot of loans also like to different real estate projects, and the real estate market is currently falling, and this has an impact obviously on the asset side of the banks. And then we have again the problems that maybe the assets will not cover anymore the deposits, and we can see also bank failures in Europe. But it's in the moment it's pure speculation. I don't have any specific numbers. Everybody says everything is in order, right? What they also said in US before.
Yes, I think it like by next week maybe a lot of things change also because it's happening so fast. And I think somehow on one side we saw the 25 basis point increase in the interest rate by Fed at the moment, but I think they gave also an indication that they will not increase further. So let's see how it develops over the next days. But let's maybe move on to our segment B, Tobias. I think where we're discussing about asset tokenization, and you gave a very interesting perspective about what is the liabilities of investors or what is the risk of the investors if the management company of the securitization vehicle falls through. That was the topic that we discussed last week. I think this week, I think one question I want to really highlight, and this is also coming because a lot of discussions that we are having with our clients or many of the sessions which I'm listening to different events regarding asset tokenization is how can we attract retail investors as well as professional investors in tokenized asset? This is one key element. Now, you mentioned about Luxembourg securitization vehicle. So do you see the Luxembourg securitization vehicle can attract not only professional investors or high net worth investors, but can also attract retail investors? Do you see there is any scope on that?
Yeah, I think it's a very good question, and we receive this question quite frequently, because that's like what kind of vehicle you should choose in the end. And from the law and from the setup of securitization vehicles, it's indeed possible to issue instruments, financial instruments, to retail investors via securitization vehicles, and this is even foreseen in the law. You can do several issues per year to retail investors, and when you pass a certain threshold, you need to register and your securitization vehicle with, for example, here in Luxembourg, with the Luxembourg regulator.
So what you're saying is the issuances that are happening, that's the fund securitization vehicles as the tokenized notes in this sense, right? That is issued. So you're telling that this can be issued under the prospectus regulation scope in Europe. So that means prospectus can be filed for that.
Yeah, for example, like prospectus is one of the metrics, but there are other regulations. That's what I meant with the CSSF. But when you issue indeed to retail investors and when you pass certain thresholds in Luxembourg, for example, it's 8 million per issuance, then indeed you need to file a prospectus and get it approved by a regulator.
So I think this is kind of what we are getting a lot of questions also on this point, because the retail is one element which a lot of this, I would say, tokenized asset issuers are really willing to target. On one side, definitely professional investors are much more easier to access because a lot of regulatory thresholds are a little bit relaxed for them. But for retail, you have a lot of, other than the prospectus, as you mentioned, there are also a lot of different regulatory framework that comes in. One question that I have also specific on this point is there any specific European regulatory framework that applies on the securitization vehicle so that gives the investors an assurance that the information the issuer is sharing are true? Because we saw in the crypto market a lot of information that issuers share. Sometimes they are false, sometimes they have no obligation to give full disclosure, right? So like transparency directive and all these kind of things, are still applicable also for the securitization vehicle here?
Yeah, I think there are several transparency regulations out in Europe, and I think the most important one we have already mentioned is actually the prospectus regulation, right? Because this is like specifically meant for disclosing the in and outs of the instruments you're issuing to the investors. And obviously, as a securitization vehicle, you're not out of flow. You have to comply with all the rules and regulations which are in place in Europe. To specifically answer your question, whether there is a specific regulation for securitization vehicles, yes, there is indeed one which is capturing only securitization vehicles which tranche actually their debts in the securitization structure. So this is like a very specific topic, which is most of the time not applicable for securitization vehicles. For example, we use for tokenization because we don't specifically tranche any debt according to priorities of claims. I hope it's pretty clear, but it's a very specific regulation which is specifically made for debt securitization vehicles, where you buy like a debt package and package it in a product, and then you tranche actually according to risks also your product.
So in this case, like, let me go back to quickly 1 second here. You're talking about the prospectus regulation. I think this can be a point which you may elaborate a bit, because many people who doesn't know about what is a prospectus regulation, and a lot of our audience may not have a legal background. So it would be good to give a color, maybe, Tobias, if you can.
Yeah, so the prospectus regulation. So regulation means that this is like a European law. It's applicable all over the European member states, and it's directly applicable. So it's contrary to a directive which has to be implemented into national law. A regulation is always directly applicable. And the outset of the prospectus regulation is actually to set out what kind of information has to be available when you make a public offering. So a public offering is actually the main term around the prospectus regulation, because the prospectus regulation is not applicable for private offerings. And what is a public offering? This is defined in the prospectus regulation, and there are certain numbers of investors. You have like to target a certain number of investors in the market, and obviously here when we talk about public offerings, you target mainly retail investors, or not sophisticated investors, right? As banks or institutional investors, but you target like the normal investors in the market. And then there's a second point, which is, I think, important in terms of the prospectus regulations. These are like the certain thresholds, so you can make use of the prospectus regulation when you reach like certain amounts. And I think we have done our analysis all over Europe, because there are still like little differences in each country. So when you target an offering of more than 2 million in average all over Europe, then ideally you need to file a prospectus, and below this amount you don't require a filed prospectus with the regulator.
Like in case of Germany, you still need to, I think, below 2 million also you need to file a documentation with the BaFin, right? Wertpapier, in that sense.
Yeah, the Wertpapierinformationsblatt. Yeah, so it's indeed, yeah, you're right. It's a regulation, right, which was meant to harmonize actually these rules all over Europe, but they gave like little leeways, however, to countries to impose like some stricter rules. And Germany did this. For example, whatever you do in Germany, when you have like an issuance above 100,000 euros, you need to file a sort of lighter version of a prospectus, a Wertpapierinformationsblatt with the BaFin. While, for example, in Luxembourg, up to 8 million, you don't have to do anything, right? So this is like the playground of the prospectus regulation.
So when you say, Tobias, here quickly, that you don't have to do anything, but I still imagine that there need to be some disclosure documents they have to file, right? Or draft, not file, but at least draft and share with the investors, right? It may not be approved from the regulator, but still they have to draft documentation for the disclosure of the securities.
Yes, this is like that's another topic in the moment. Indeed, depending on the national law, but let's say you make full use of the liberties of the prospectus regulation, currently up to 8 million in Luxembourg. In the moment, you don't have specifically to create a document. Obviously, it's in the interest of the investors, but and this will change also very, very soon with also with the implementation of the crowdfunding regulation, which is another regulation. Then indeed you're required to create a short document for the investors where all the risks and opportunities are transparently set out. In general, I would say, Arnab, when you target investors, it's always in the interest of the investors, but also of the issuers of the instruments to have a very detailed and very easy understandable document where you understand your risks and opportunities, right?
I think I like that element. What you mentioned, it's not only on the interest of the investors, but it's also in the interest of the issuers. So this is, I think, it is a very wise words, I would say. Like it makes sense, because when you're clarifying what is your rights and obligations are towards your investors, later on there is no ambiguity, and when the ambiguity is not there, that makes it a relationship in the future much more cleaner. So I think we covered quite a lot of topic today for the day, Tobias. I think we can rest this session here. I think we will have some interesting news to share maybe the next week. To our audience, thank you for listening to us. We really appreciate your feedback. So please feel free to comment, like, share, subscribe also to the STOKR channel, so we also can share with you whenever new episodes comes on the channel. And also please share what you like, what you dislike, what you want us to include in this conversation, what kind of discussions you would like to hear from us regarding asset tokenization. And that's it. Have a great day and have a great week ahead. See you next week.
Also, you, Arnab. Everybody. Ciao.